Welcome, listeners, to another deep dive into the pulsating heart of the tech and financial markets. Today, we're unpacking a whirlwind of developments that are propelling the S&P 500 toward a staggering 6,900, with the magnificent 7 tech giants leading the charge. We'll also dissect a game-changing restructuring at OpenAI that cements Microsoft's dominance in the AI space and raises critical questions about Apple's AI strategy. Buckle up. This is a story of innovation, market momentum, and strategic chess moves. The S&P 500's relentless climb, Mag 7 as the engine. Let's start with the big picture. The S&P 500 is on a tear, eyeing 6,900 and potentially 7,000 if upcoming earnings deliver as expected. Historically, the index has been a barometer of economic health, reflecting investor confidence and corporate performance. Since its recovery from the 2020 pandemic lows, where it briefly dipped below 200, the S&P 500 has nearly tripled, fueled by tech innovation and unprecedented monetary stimulus. Today, the Mag 7, Meta, Microsoft, Amazon, Alphabet, Apple, and Tesla are the turbochargers. Year to date, we've seen breakouts from Alphabet and Apple, with the latter surpassing a $4 trillion valuation, a milestone unimaginable even a decade ago when it first hit $1 trillion in 2018. What's driving this? It's a rebuilding of investor positioning, a renewed faith in tech's ability to deliver growth amidst global economic uncertainty. Tesla, which last hit an all-time high of around $465 in December 2021, is poised for a breakout past $488, especially post-earnings. If Tesla joins the party, it could act as a powerful catalyst in the coming days. With 5 Mag 7 companies reporting earnings soon, the odds of all missing are slim. Their collective strength is not just lifting the index, but reshaping market dynamics, concentrating power in a handful of names, a trend reminiscent of the dot-com bubble, though today's giants have far stronger fundamentals. Microsoft and OpenAI, a defining partnership. Now let's zoom into a seismic shift in the AI landscape. Microsoft has solidified its position as a major shareholder in OpenAI following a restructuring that transforms the AI pioneer into a for-profit entity. The headline? Microsoft will reportedly receive 20% of OpenAI's revenue, a company now valued at $500 billion, with revenue growth projected at 228% by 2025. Microsoft stock jumped nearly 2% on this news, adding $135 billion to its market cap in a single day. This isn't just a financial win. It's a strategic coup. Historically, Microsoft has been at the intersection of software and AI, with Azure Cloud Services growing at a blistering 33% pace. Analysts expect this to continue, and this OpenAI deal adds another layer of certainty, removing months of speculation about their partnership. It also allocates up to $250 billion in potential OpenAI spending on Azure, while allowing OpenAI flexibility to work with other cloud providers like Oracle. This isn't just good for Microsoft. It's a boon for the entire AI ecosystem, signaling sustained demand for cloud computing as companies monetize AI capabilities. Globally, this positions Microsoft as a linchpin in the AI race, potentially outpacing rivals in Europe and Asia, where regulatory hurdles slow similar partnerships. Apple's AI conundrum, a strategic crossroads. But this Microsoft OpenAI tie-up raises a fascinating question. Where does Apple stand? Apple's partnership with OpenAI, integral to its upcoming Siri and Apple Intelligence revamp, now faces uncertainty. With Microsoft so deeply embedded in OpenAI's financial and technological future, does Apple double down on this relationship or pivot to a rival like Alphabet's Gemini? Privacy, a cornerstone of Apple's ecosystem, complicates deeper integration with OpenAI, especially given Microsoft's stake. A potential partnership with Alphabet for 2026's Apple Intelligence rollout could be a game-changer, aligning two titans against Microsoft's growing AI dominance. This uncertainty is a stark reminder. Despite being the world's largest consumer tech hardware company, Apple's AI strategy remains opaque. Investors and users alike are left guessing, a rare position for a company known for tightly controlled narratives. Historically, Apple has thrived on ecosystem control, as seen with iOS's walled garden since its 2007 debut. A misstep in AI could cede ground to competitors, impacting not just Apple but the broader consumer tech sector. Sector impacts and global ripple effects. The implications ripple across sectors. For tech, AI spending is a halo effect, boosting cloud providers and chip makers like NVIDIA, already a darling of the AI trade. Financial markets benefit from the Mag 7's momentum, but concentration risk looms, echoing the 2000 bubble when tech overexposure led to a brutal correction. Globally, this reinforces U.S. tech dominance, potentially widening the innovation gap with Europe and China, where regulatory and geopolitical tensions stifle similar collaborations. Investment and policy implications. For investors, the near-term outlook is bullish but cautious. The Mag 7's earnings are a litmus test. Strong results could push the S&P 500 past 7,000, but any stumbles might trigger profit-taking. Microsoft is a clear buy on AI exposure, while Tesla's potential breakout warrants attention. Apple, however, is a wild card. Hold until AI clarity emerges. Diversify beyond tech to mitigate concentration risk. Sectors like healthcare or energy offer stability amid volatility. Policymakers must grapple with AI's monopolistic tendencies. Microsoft's OpenAI stake could invite antitrust scrutiny, especially in the EU, where tech regulation is stringent. Balancing innovation with competition will be key to preventing market distortions. Near-term catalysts. Watch these triggers, the Mag 7 earnings over the next week, particularly Microsoft's Azure results and Tesla's performance, any Apple-Alphabet partnership announcements, and regulatory responses to the OpenAI restructuring. These will shape market sentiment into year-end. In conclusion, we're witnessing a historic moment where tech's giants are not just driving markets, but redefining the future of innovation. The road to 7,000 on the S&P 500 is paved with opportunity and risk. Stay informed, stay diversified, and keep your eyes on AI's unfolding saga. Until next time, this is your guide to navigating the financial frontier.